absolutely quiet, 17,440.
For the market, like I was pointing out, it's a 0.5% cut.
The Nifty is down almost 100 points.
0.6%. It was worse, about 140 odd point cut. It's 0.6%.
The memory of that one-day rebound move, that's already fairly distant because we've got a 140-point cut as the Nifty is going home exactly at the day's lows.
Well, it was a weak day of trade after 8 days of falling and gaining in yesterday's trading session. Nifty gave up almost the entire gains of yesterday by falling about 130 points today. Yesterday, it gained about 140 odd points. Hello and welcome. You're watching us here on Markets Today on CNBC-TV18. We track 6 hours of trade in 5 big stories. Let's talk about those 5 big headlines then. A range-bound, it's a weak session in today's trading session. The Indian indices failed to hold on to yesterday's gains. In fact, gave up all of those gains. Both the Nifty as well as the Sensex ended at the low point of trade. IT stocks led the fall with a decline of almost 2% on that index. The Supreme Court forms a 6-member committee to review regulatory mechanisms and protect investors after the Hindenburg report on the Adani Group. Also orders SEBI to probe the allegations made by Hindenburg. Adani Group stocks recover most lost ground after a series of block deals worth more than $2 billion. Sources say the promoter group has sold stake in 4 companies, leading to a leading US-based fund. RVNL's joint venture with Russia's largest train manufacturer emerges the lowest bidder for an order to manufacture 200 Vande Bharat trains. The mega 58,000 crore rupee order will be split with the joint venture of BHEL Titagar Wagons as well, the second lowest bidders. This news helped all 3 stocks zoom. Sales of Hero MotoCorp and Eicher Motors pick up in February. Both two-wheeler makers expect improved consumer sentiment to sustain the momentum. However, Bajaj Auto says post-COVID pent-up revenge buying has tapered off. In stocks making news, macro-tech developers fires up on heavy volumes and positive commentary. Bajaj Finserv gets regulatory clearance to enter mutual fund business, while Olectra Greentech's e-tipper gets the green light to hit the roads. Let's tell you what we have lined up for you on the show today. It's a packed show. In Market Opinion, we have Andrew Holland, who's the CEO of Avendus Alternate Strategies. In Corporate Voices, we have Umesh Chaudhary, MD and CEO of Titagar Wagons, one of the stocks of today. But before all of that, let's get to today's market action. It was a weak day of trade. In fact, we ended at the low point with the Nifty as well as the Sensex losing almost 0.75%, wiping out all the gains that we clocked yesterday. The Sensex was down 500 points, with the Nifty Bank falling about 0.75% as well. The mid-caps, while at an index level, were slight outperformers in the sense that they fell lesser than the frontline indices. But the broader markets were weak, and we had more stocks declining than advancing. For more details, Prashant Nair joins in with the wrap.
Well, yesterday was a reversal higher after 8 days of losses prior. And today it was a reversal of yesterday's reversal. So up 150 points yesterday and gave back pretty much all of it today. Banks came under selling pressure as well. They were okay till about 1 p.m. mid-afternoon, and they declined substantially post that. Mid-caps and small caps also. First half was good, second half not so much. Market breadth deteriorated, declines outnumbering advances in a pretty strong way. What was higher today, it's a shorter list. Real estate did well, and I'll get to stocks in a bit. And you had the energy stocks, which were up as well. IT services along with banks, private banks in particular, which lost today, and autos were down and out. Nifty losses coming through in names like Maruti, Axis Bank, TCS Tech Mahindra, Infosys, SBI Life and Nestle, which were down. In the broader markets, right, I mean, as I said, more down than out. So I'll start with the losers. Siemens India, Triveni Turbines was up 20% last 2 days. It reversed today. CG Power, Escorts, Uflex. Again, these are all reversals, profit booking, pullbacks after yesterday's strong showing. Rupa was in a similar light, and Traxon, the recent listing, also lost. The Adani Group stocks, and there was more up than down like yesterday. So Ambuja Cements, case in point. Adani Wilmar, case in point. Lodha was limit up 20%. The rail infra names, RVNL, IRFC, etc. You also had Angel One, GE Shipping, etc., which did quite okay. Markets are worried about the one global thing, which is US interest rates, and they are moving higher. The US 10-year is knocking at 4%, and you want it lower, not higher, when we come back tomorrow morning. That's the point number one. And of course, we also get data, initial jobless claims out of the US, and one hopes they are not too good, because the problem has been it's so good that it's actually bad. I think when we come back tomorrow morning, those things very much center and the focal point. Back to you.
Right, we will monitor the market as it goes, because markets doing just market things, rising and falling the very next day. Andrew Holland of Avenda Strategy says that the first half of the year might actually be challenging for the markets. Listen in.
RBI in April, might go, higher and stay there for longer, which is not great for our growth, and probably would mean again earnings revisions, for at least for the first half of the year, and therefore there's no real catalyst for our market, because globally nothing's happening, and locally there's nothing really to kind of get excited about. I know that obviously the budget was good, and we'll see the benefits of that in the second half, but it's going to be that kind of tricky first half. Is probably not going to be great for our markets. At best, we can maybe tread water around these levels a bit lower, and then the second half I think will start to get better as growth starts to pick up and earnings forecasts get revised a little higher from where we are today. Defence, renewables, we know that's going to be a global investment cycle, and that's going to continue in India. So we're not moving away from that. We're not moving away from the fact that there'll be, in terms of infrastructure spending, more on kind of factories and smart offices, where India can provide some of the security kind of problems that we've seen in terms of supply outside of China. And those are the things which I don't think are going to go away from us, as well as the whole domestic consumption theme in terms of travel, hotels. It's things we were talked about before, and I just can't go and move away from them to try and find anything more exciting at the moment.
Well, let's talk about the second big headline today, and it was an important one. The Supreme Court has set up a 6-member expert committee headed by former Supreme Court Judge A.M. Sapre in the Adani Hindenburg case. The panel comprises of veteran bankers like O.P. Bhatt, K.V. Kamath, and we also have Nandan Nilekani as a part of that panel. They will review the regulatory mechanism and suggest steps to protect investors from market volatility. The court has also directed market regulator SEBI to probe allegations made by the Hindenburg Group against the Adani Group, and also if the Adani Group flouted the 25% minimum public shareholding rules. Less than an hour after the court's order, Gautam Adani tweeted, and I quote, "The Adani Group welcomes the order of the Honorable Supreme Court. It will bring a finality in a time-bound manner. Truth will prevail." End of quote. We have our correspondent Ashmit Kumar joining in with the details of the Supreme Court's order. Ashmit.
The Supreme Court giving a very pointed order in terms of what needs to be done, what are the stakeholders, what are is the mandate in question, and what is the timeline in question. We'll take our viewers through that one by one. First, as far as the expert panel itself is concerned, the Supreme Court was very clear. It will not accept suggestions from the petitioners, nor will it accept suggestions from the government on who should be a part of this expert panel. It will do it by itself. And it has come out what looks like a committee which has members which have significant experience in the field. So we're talking about the likes of veteran bankers, like you pointed out, the likes of O.P. Bhatt, K.V. Kamath. We also have Nandan Nilekani on board. Justice Devadhar will also be there. Somsekhar Sundaresan. Mind you, he's one of, in fact, the lawyers who was recommended by the Collegium for elevation as a judge. He will also be a part of that, and this, of course, will be headed by Justice A.M. Sapre. The mandate is very clear. As far as this committee is concerned, they will look at not just aspects of investor protection. They will give recommendations on improving upon the current framework, but they will also look at whether or not there has been any instances of regulatory failure in accounting for and then dealing with the situation that have in fact been red flagged as a part of the Hindenburg report, which is what brings us to the second aspect. Which way will now SEBI head as far as investigations are concerned? Now, SEBI, as a part of its submissions before the Apex Court, had not informed any specifics as far as that particular investigation is concerned, and therefore, the Apex Court has given a 3-part direction to SEBI, 3 aspects that SEBI needs to probe into. One is minimum public shareholding norms. The second is securities contract rules and regulations, whether or not that has been complied with. And finally, manipulation of share prices. All these 3 aspects will now specifically have to be looked into from the Adani Hindenburg saga angle, and that is something that SEBI will have to do over the course of next 2 months and submit its status report. So again, this time-bound exercise is what the Apex Court is hoping for, and is hoping that these recommendations from the expert panel will take these proceedings forward.
Today, Supreme Court has pronounced the order and it has constituted a committee to inquire into the Hindenburg report and also to suggest the measures so that in future the regulatory mechanism shall be made more stronger so that the money of the investors could be saved, and it will also suggest the measures to strengthen the entire regulatory mechanism. Today committee has been constituted, so now after the submission of the report only court will reach upon any conclusion, and we hope committee will definitely see the concern about the common investors.
I think the outcome is very positive of the deliberation. The Supreme Court did the arguments that have happened and what they finally pronounced. That I'm glad something like this has come and we've got some decisive course of action, because we need to not take this off the public discourse, the political mudslinging, what debates we've had in the parliament, what we're having in social media. There's a lot of mind space and a lot of energies being wasted and misinformation that's being spread around.
Well, that's about the entire story. But in the meanwhile, Adani Group stocks also recovered more lost ground after a series of block deals worth more than $2 billion came about on the exchanges. Sources tell CNBC-TV18 that the promoter sold stake in 4 group companies to a leading US-based fund. Nimesh Shah joins in with the details of that. Nimesh.
Well, there were large block deals in the Adani Group stocks in the morning trade, amounting to a total of close to 15,500 crores. The blocks happened across 4 of the group companies, which is Adani Port, Transmission, Green, as well as Adani Enterprise. In Adani Ports per se, there was a large block deal of close to 8.6 crore shares worth close to 5,300 crores. In Adani Green, there was a block deal of close to 5.6 crore shares, amounting to close to 2,800 crores. In Adani Transmission, there was a block of close to 2.8 crore shares, which was worth close to 1,900 crores. And the biggest of all was in Adani Enterprise, close to 4 crore shares changing hands, which was amounting to close to 5,500 crores. Now, all this put together, there was a block deal worth 15,500 crores. What I understand from sources, Adani promoter family was a likely seller in today's block deal, and a big US-based fund was one of the large buyer in today's block. So the disclosures will be quite important. But if the information is correct, then Adani promoter family has managed to raise 15,500 crores by selling stake in the 4 group companies, which is Adani Port, Adani Green, Adani Transmission, as well as Adani Enterprise. Back to you.
All right, Himesh, thanks a lot for that. The third headline for the day, the rail stocks, all of them were in focus today. RVNL's joint venture with Russia's largest train manufacturer emerges as the lowest bidder for an order to manufacture and maintain 200 Vande Bharat trains. This mega 58,000 crore rupee order will be split also with the joint venture of BHEL Titagarh Wagons, who are the second lowest bidders. The news helped all the 3 stocks gain in today's trading session. The biggest gainer was RVNL, then we had BHEL up almost 2.75%. Titagarh Wagons was up around 3.3%. At one point, it was up in double digits as well. The management clarified that the revenue share that they will have from this entire 58,000 crore order would be roughly around 15,000 crores. Vivek Iyer joins in with the details. Vivek.
Well, absolutely. So, we are actually dissecting the entire 58,000 crore opportunity as far as the 200 Vande Bharat train sets are concerned. Remember, 2 sets of companies are the ones that are impacted from this particular opportunity. So the first one is RVNL in consortium with its Russian partner has emerged as the L1 or the lowest bidder for this particular opportunity. RVNL has a 25% share in that particular JV. L2 or the second lowest bidder has been a consortium of BHEL and Titagarh Wagons. The estimated cost for RVNL was around 120 crores per train set. For BHEL, it was around 140 crores per train set. The estimated order size is 58,000 crore. Now, breaking it down, the cost or the upfront delivery on back of the train sets would be around 26,000 crore that will be paid once we deliver the train sets. The remainder 32,000 crores will be paid over 35 years, and this is as per the maintenance contract. Now, L1, RVNL with its Russian partner will manufacture around 120 trains. L2 bidders, that is BHEL along with Titagarh Wagons, if they agree to match the L1 bid, will be able to manufacture the remainder 80 trains. So we had Titagarh Wagons on our channel, some time ago. They said that as far as their partnership is concerned, they are a 55% partner, and they said the contract value for their organization is around 25,000 crore for their consortium, around 25,000 crore. Significant opportunity, and all of the stocks are doing really well in today's trading session.
We've still not heard from the railways officially as to in terms of getting counter offers, etc. But if we kind of calculate the overall contract value for our consortium, it works out to about 25,000 crores. So we are at about close to 55%.
All right, so that's about all the railway stocks. But an interesting news coming in: market regulator SEBI working, hard to crack the whip on multiple stories, and this one is the one that has cracked the whip on two companies for stock price manipulation by misusing social media. More than 50 people and entities that have been linked to the Sadhana broadcast and Sharpline broadcast have been barred from the market until further notice. Yash Jain joins in with the details and some interesting names there too. Yash.
Well, that's correct. The first of its kind from market regulator SEBI, two orders against two companies on charges of misuse of social media for price manipulation. The two companies are Sadhana Broadcast and Sharpline Broadcast. Interestingly, share prices of both companies were artificially inflated through propagating false and misleading information via YouTube. The modus operandi was a group of individuals purchasing shares at a much lower price and then uploading false and misleading videos on YouTube recommending buying these shares for the larger public. These YouTube channels had lakhs of subscribers and the videos received crores in viewership. The false and misleading videos were boosted through promotion via campaign advertising and paid advertising. The natural outcome of the process was a spurt in the volumes as well as the price of these shares, helping certain KMPs and people in the know of this matter offload their shares to the larger public. Now, notices mentioned by SEBI in the order against two companies include creators of YouTube channel, net sellers and profit makers, and volume creators. SEBI has been able to establish a connection between all these three categories of individuals. Now, in the case of Sadhana Broadcast, SEBI has named 21 people as notices, which include actor Arshad Warsi and his wife, Maria Goretti Warsi, who made profits of 29 lakhs and 38 lakhs respectively. And in its order in the Sadhana price manipulation case, SEBI has barred all notices from accessing the capital markets till further notice. Also, certain notices have been will have to disgorge the illegal gains of nearly around 42 crore rupees as penalty. Now, in the case of Sharpline Broadcast, SEBI has named 24 people as notices. All these notices have been barred from accessing the capital markets till further notice from the regulator. Also, here the same model has been followed, that certain notices will have to disgorge the illegal gains of nearly 12 crore rupees as penalty.
All right, Yash. Thanks a lot for that interesting story out there. With that, we'll step into a short break, come back and talk about all the other headlines. You stay tuned.